Yo, what is going on, ladies and gentlemen? I'm not a financial advisor. This is not financial advice. If you want to join my live streams and watch my live streams every single day, I do live stream my Discord. Just click the WAP link in the description. I am going to make a promo code for maybe a discount for maybe a week or two. So if you're interested in that, check my Twitter. I'll probably give you guys a promo code. I'm not going to put it in the description. The other thing is, if you want to use a funded account, make sure to click the Apex link in the description. Again, futures are way better than Forex in my opinion. And once you get underway with these Apex accounts, I think I really see the benefit and how good they actually are. So let me know if you have any questions about that. So today's video, as you can see, I'm going to talk about kind of an inverse checklist, okay? And these are kind of the 5 things I look for, all right? And I'm just going to go over them. Okay, so the first thing I look for, okay, just number 1 on the list, singular fair value gap. Okay, when I'm looking for an inverse, I like to make sure it's a singular fair value gap. So for example, okay, this would not work, okay, because there's multiple here. It just doesn't make sense. There's no single fair value gap. So what do? I go to the higher time frame and I kind of see, okay, if we go to the higher time frame, okay, is there a chance where, okay, we merge fair value gaps? And in here, you can still see there's still 2 here. Now, if we go to the 1 hour, now there's a singular fair value gap. So the 1 hour would be the best case scenario for this. However, for me, at least, because it's the 1 hour, if we did close above, okay, where would the target be? The next target would be the next swing high, okay, which would be right here. But for me, since it's the 1 hour and this is a big zone, this would be more of a bias thing. Generally, 1 hour and over, 30-minute over, I use inverses for bias rather than entries, because when you get to a certain point, these become too big for an entry. So I only like using entries on like the 15-minute or less. But the hourly, I'll still look for lower time frame entry if this is closed above. So like if it's set up like this, you really can't enter precisely. Even though it's a single fair value gap, and that's only because the zone's kind of bigger. I mean, if you're a day trader or a swing trader, it might be worth it, but I usually like to take inverses on the 15-minute or less. So again, you can just see here's a singular fair value gap. Because it's a 1 hour and above, I just use this for the draw liquidity. Okay, and this kind of goes hand in hand with my second one. If I'm seeing this and I see an hourly inverse and I see it's close above it, that tells me, okay, now the draw on liquidity is obvious. Now what I'm going to look for is another inverse setup. Okay, so something like bearish fair value gap, and then we break it, retest it like that. So that's probably a little complicated, but let's say the bearish fair value gap's right here. Okay, or let's say the bearish fair value gap's right here. Okay, it's a bearish one right here. We close above it. Okay, now I know we're above this hourly. I know we close above this hourly, assuming we did. Now I'll take the lower time frame setup and I'll just bring it up to that high. Okay. So that's what I would do personally. Okay, so again, you can just see the checklist. Is it a singular fair value gap? If not, I go to the higher time frame. If, let's say this fair value gap disappeared, okay, if this fair value gap disappeared when I went from the 15-minute to the hourly, I just wouldn't use it. That wouldn't be very obvious to me. Okay, for now, this looks pretty obvious to me. So that's why I like it. And then it would give me an obvious draw on liquidity if we close above it. So then I just go to lower time frame and look for like another one of these setups. So if I go to the obvious draw on liquidity setup, I'll try to show you an example right now. If we go up here, okay, on Friday, there was a big 15-minute fair value gap here. It was right here. And I figured that draw would be pretty obvious once we close beneath it. And you can kind of see we closed beneath it, but at the same time, we also hit this low, so it wasn't a valid setup. But because of this displacement and how much we actually did close beneath it, I was like, okay, now if we get a inverse, a short, the draw on liquidity to me was obvious because we were rejecting, if you go to the daily chart on ES, we were rejecting a PD array to the left, okay, which is obviously gets into my later on the checklist. So I figured once that 15-minute broke, I figured that we'd probably go past the internal sell side here. I figured we'd go to the data low, which was right here. So the draw on liquidity to me was pretty obvious on Friday. And really to me, the draw on liquidity becomes obvious when there's a lot of speed and displacement cutting through PD race on the left. Usually you want to look for some sort of old data high or low or some old daily low. And the draw on liquidity, sometimes it's not going to be obvious, okay? If you like look right here, okay, this is an example where when we're here in live time, the draw on liquidity to me does not become obvious really until we kind of close above this. So this is just a great example, right? On this green candle, I don't really know the draw on liquidity here until we break this. So sometimes you're just not going to know it until like another condition breaks or whatever. So and the draw on liquidity, don't get discouraged if you're not good at it. Okay, I've spent a lot of time watching the markets to figure out the best draw on liquidity, like just techniques and finding it. And I've taught it before, but I like using the inverses. So like if we close above it, it tells me the draw is at least to this high or whatever, which you can see we barely even hit. But that's one that's probably going to be struggled by the most if I had to say which one. So that's why sometimes if there's no obvious draw on liquidity, just don't take the trade, okay? Make sure it's like a situation you've seen before, it's obvious, okay? If you're not really finding yourself know a lot of obvious draw on liquidities, that probably just means you need some more screen time, which is obviously probably what you don't want to hear. But it has to be said, okay? You probably need to demo trade more, whatever it may be, if you're not finding the draw on liquidity properly. Okay, so next one, was internal liquidity already purged? Okay, or external liquidity, doesn't matter. So before I take an inverse, I like one like a lower high swept kind of before. For example, okay, if we go, let me see here. For example, if we like go right here, I'm trying to go to the kills. So you can see there's some inverses that fail here, and you're probably like, oh, why isn't he going over these? Okay, look at the time. It's 2000 o'clock, right? Look at right here. This is a textbook one. Why does this fail? Okay, it fails because it forms at almost at midnight. Okay, these are not kill zones. You do not want to be trading in these kill zones. Okay, so I'm trying to find one in the kill zone. Okay, right here, for example, right here, perfect. So this one right here, perfect example. Right here, was the higher time frame liquidity already purged? Yes, it was. And by this time, you could have seen, okay, we were on ES at this daily fair value gap, and we are kind of rejecting it. So you could have taken those both into account. But was this high really purged? Not really. I can say I would have gone 10 times heavier in this setup if this high was purged. I know all this was already purged, but when we get all the way down here, I feel like this doesn't matter to me as much anymore. I like when the most recent high is purged. This was not. This is a setup I'd maybe take a few micros in. Wouldn't really go that heavy. Okay. I like to make sure it's purged. So let me see if I can find you another example. So right here, for example. Okay, beautiful setup right here. So right here, okay, you can see there's an inverse right here. I know we didn't take this low, but that's fine because you can see we took these equal lows, which, again, setups after equal lows are completely fine even if we don't hit the bottom. We took this low. We took this low, like right. We took a lot of lows here already, and this displacement after taking at least 3 lows and not this low is enough to tell me, okay, this inverse should work at least to the next high, okay, which is right here. And you can see we don't really go much past that, but I like to make sure some internal liquidity is swept, okay. And I do say internal liquidity because sometimes you'll see like this is external because if you go in the higher time frame, it's the outside of the range. And all this is internal. And you can still see we get a setup after internal liquidity swept. Okay, it has to be enough, though, because if this is like one low, I probably wouldn't have taken it. But you can just see clearly this would be enough for me. Okay. If I go to like... Let me see if I can find one more real quick. Okay, if I go to right... let me see if we can just find an example. All right, like right here. Perfect example. Okay. This forms at London Open, so this is fine to look at. But Keith's textbook for value got broken. I know we didn't take this high up here, this high up there, but we did take the most recent high. So again, this isn't enough for me. If we violate this fair value gap, I at least want the next internal liquidity, which would be down here. Okay, if you back away from your screen, this is just the most obvious. So this is the best example because we take internal. Okay, and we kind of already filled this gap too. Okay, which is good. But here's just an example of, okay, here's the internal swap. Clearly, here's a single fair value gap. Close below, I'm shorting to the internal liquidity. Okay, so that's that. The next one, okay, is there a body close? Okay, so many times I used to try to anticipate, oh, there's going to be a body close above, and I try to guess before. I can say in some situations, if you're more seasoned or if you have more experience, it's not bad if you really are confident in the bias. But there's been times where I jumped the gun and I'd end up taking a loss. Okay, so you have to make sure there's a body close. Okay, I'm just going to show you an example. So, like, let's say go in the replay mode. Okay, I know this works anyways, but that's just a good example. Okay, let's say you see this candle, you're like, oh, this is a major red candle. I bet you the next candle is going to close under. And you short without waiting for the close. I've been in trades where when I see this happen, we'll just go like this. We'll go back up to the high, then back down. And it just annoys me because it's like, oh, I wish I just wait for the candle close because technically this isn't closing below. So you really want to wait for that candle close. I strongly recommend it. And that's a simple one. Not really much else to talk about there. Just try not to jump the gun. If it's like 3 seconds till the candle close and it's, it's going to, then that's fine. But if you're trying to chase 30 seconds before the candle closes, just remember the wick could still wreck you. The last one is it delivering from a PD array? Okay, so what I mean by this is instead of actually purging a lower high, you kind of got to see like, okay, if I see a singular inverse here and we close above it, okay, you can see this is the only inverse in like these 3 or 4 candles. You can see we're clearly delivering from this, okay? Which means if we're delivering from this bullish fair value gap and close above this bearish fair value gap, okay, chances we go to the high are pretty likely, okay? Now, this is different from taking a lower high. In 1 second, there is a spider on my desk, which I don't know how I got here. If you did get this far, come towards spider. Good lead in. Anyways, it just kill it, I think. So anyways, right here, if I'm looking for this inverse, it's like, okay, maybe we didn't take a low. See how we don't really take any lows here, or we don't purge any lows, but we are delivering from the fair value gap. So that still counts to me like good enough. Okay, you can see right here, we purged a low. So I would still be willing to take an inverse. But you can see right here, we did not sweep this low, but we are delivering from a bullish fair value gap. So sweeping a low or delivering from a bullish fair value gap are the two things or two scenarios where it's okay to take the inverse. Okay. So yeah, that's kind of the checklist I look for. Pretty simple. Again, I think the most important part of this checklist is having a really obvious draw on liquidity. Again, I use inversions on like the 1 hour and 4 hour to tell me the draw on liquidity. So if you don't know if it's obvious, look for inversions in the 1 hour, 4 hour. There's going to be times where you're going to have to wait like an hour till the candle closes, and until you really know the draw on liquidity, just don't trade. Okay, so I think that's going to be it for today's video. Appreciate you guys all watching. I am 100 subscribers away from 100K, 10K. So if you could drop a sub and a like, I'd appreciate it. But yeah, hope you guys enjoy your evening, day, wherever you're from, and peace out.